Hello, what's up, guys? Welcome back to Zodiac Trader. Today, we're going to talk about the carry yen trade and also the Japanese bank, the central Japanese bank, step out of YCC. We all know it was historical, and I made a video about how I reckon the Bank of Japan BOJ is likely to have to cease the YCC euchre control by end of this year. So it turns out I was right. Um, but there are several things I want to mention, and people have been asking me why I actually thought that there will be a cease of euchre control. So in this video, I'm going to talk about my perspectives and something about the carry trade. Okay, so we all know right now this is so far the first interest rate hike in 17 years. So the reason why Japanese economy is stuck is because the Japanese economy is struggling to have inflation back. So it's very difficult for Japanese economy to have stable inflation. Let's say Japanese government, it's been working really hard, but uh, people are reluctant to invest in stocks. People are really hesitate to actually kind of invest. So instead of invest in stocks or buying house lands or invest in small, medium-sized company, they prefer to keep their money in the bank. So in that way, they feel safe. So that's the reason why Japanese inflation is kind of a bit low. It was really difficult for Japanese economy to keep a stable 2% inflation, and hence the reason why the Japanese economy was having a huge obstacles in the past couple like past decades. We're talking about more than 30 years, ever since the 1990s. So Japan used to be the second largest economy system, and we all know what happened then. You have a Japanese bubble burst, and you also have the United States and other Western countries try to set up a deal, and that deal's name is Plaza Accord. They had this agreement forcing that Japanese yen to go up, and also because of that Japanese yen is going up, and also the dollar is going down, that actually reverse the trade uh, the trade surplus situation for Japan. So it turns out that raise of Japanese yen actually kind of burst the Japanese economy bubble, and hence why we're and plus multiple reasons. That's why we're seeing the Japanese economy was suffering for last decade. So that was a very long lost decade. So there are several things I want to mention about the reason why uh, the Bank of Japan would like to cease the YCC control in this year. Okay, first reason might be because of the Federal Reserve is raising rates. Right now, we're having these 5.25 basis point to 5.5 basis point, 5.5% of interest rate. And with that interest rate kind of environment, it would be reasonable for Japanese central bank to raise rates for a bit. Plus the fact that most countries are having this inflation problem. Also for Japan, it's likely to for Japan also having this inflation problem. Okay, second reason is because ever since the COVID-19 thing, we had a huge spike of inflation, like globally, because the central government, the central banks all around the world, trying to stimulate our economy by injecting liquidities and also printing a lot more money than we should have. So having injected such a huge amount of liquidity, we are suffering and we are having these inflation problem. So it's not difficult for Japanese economy to have uh, to actually can maintain such level of inflation, because back then when the inflation was low, it is super difficult for Japanese economy to have its inflation going back to above 2%. So right now, because of these macro inflationary scenario, the Japanese central bank is able to have a lot easier kind of a macro environment to keep their inflation high, and that would be another reason why the Japanese bank decided to raise rate this time and end the YCC control. And third, as I have mentioned the last video, I was talking about the yield curve control. I have explained explicitly about how the yield curve yen, like the yield curve control policy work. It is not the new or kind of invention, because we were seeing similar thing back in the United States during World War II. It is a method that you can be able to control the long-term interest rate, and at the same time you'll be able to have enough liquidity for the market, um, and to be able to having you can lower interest rate and at the same time maintain the monetary inflationary scenario controllable. So it's like YCC control is not a new thing. It's not a big deal. Um, monetarists monetarists used to adapt that kind of strategy and that kind of policy back then. So the reason why Japanese central government is adapting that what you could control back uh, in these recent 10 years is because like Japanese central bank already lowered interest rate back to a negative regime. So it's impossible for the Japanese central bank to be to just put it this way, when the interest rate is lower below zero, and it's difficult for the central bank to get more easing. So instead of lowering the interest rate further, there will be an alternative method, which is yield control. And by doing that, um, people actually realize that they couldn't make the financial institutions and large institutions realize they cannot simply take the money out of the central bank and buy bonds just to make the yield, that they have to put that money somewhere else to make profits. So that's the real purpose behind the yield control, because the central bank is basically pushing and forcing these financial institutions to put their money elsewhere. So also, this Japanese central bank is also buying ETF massively, and right now they have stopped uh, buying the ETF. They have stopped doing these yield control, and right now because the Japanese central bank figure this is the right time, because you have macro inflationary scenario, and also you have positive wage growth, and also you're seeing some different signal of reviving economic growth. So which is the reason why Japanese central bank decided that they will just have they will decided to cease the YCC, meaning stop the YCC policy. And now this is the time for a Japanese bank to actually plan out its transition very carefully. So let me summarize a little bit of what Japanese central bank have been doing lately. First of all, the Japanese central bank has no plans or whatever, at least within this year, to further raises the interest rate further. So we're not going to see from my opinion, based on this Japanese central bank statement, that I would highly doubt that they will raise another 20 or 25 basis point by end of this year. So we are likely to see that Japanese central bank maintain at 0% to 0.1% of interest rate, still low. So, in a matter of fact, it's not going to impact the Japanese financial market severely, but it's enough for the world to see that Japanese central bank does have the courage and also determination to end its negative interest rate policy. We call this NERP, and also it has what it takes to normalize its monetary policy. So it would be a positive signal. Second, because of the Japanese central bank is not having these consistent raising interest rate kind of plan, so it will kind of be easing for the global financial institutions, meaning that they don't really have to worry about that Japanese economy system would be devastated by the raising of the interest rate just yet, because that they know right now central banks is going to do it slowly instead of like hush hush, like instead of pushing, kind of make a quick raise hike and actually jeopardizing the entire operation. And third, the Japanese central bank, even though they have ended the massive ETF buybacks, right now, because the Japanese central bank is already making profit because the Nikkei was traded like the Nikkei index was traded above 40,000 points, which is the historically high level. And by that, I actually meant it. I was right about Nikkei would have made another historically high. So because of that reason, Japanese central banks are actually making money out of its balance sheet because the Japanese central bank they were holding a lot of ETFs. So the problem right now is that even though they have shut down the entire ETF buyback mechanism, right now they are still keeping necessary amount of bond buyback to basically avoid speculators creating these volatility that could end up damaging what Bank of Japan is going to do next. So to summarize, the actually Central Bank of Japan actually has a long-term plan of monetary normalization, and because of the interest rate right now in Japan is rising slowly, but it's not like very high. It's still somewhere around 0 to 0.1%. That means temporarily that we are not going to see the total reverse or unwinding of yen assets because of carry trade. So speaking of carry trade, I think this is very important when if someone wants to study Japanese economy. I think to understand yen carry trade is one of crucial part, because you have to understand, because yen is so cheap, people decided to borrow yen with very very low yield, and they will use that money to buy other high yield assets. So basically, people will hold yen. They will keep the Japanese yen up in hands. So right now, because it is still profitable. If you still borrow money, you pay very very small interest rate, and you'll be able to make that difference. For example, you can borrow yen and sell dollar, right? That's a pretty typical thing to do. And you can borrow yen and actually do another currency, high yield currency, anything. So that carry trade is a big part of Japanese economy. Right now, the central bank's trying to take it slowly. If the Japanese central bank decided that they're going to have a quick raise in the interest rate, that's probably going to force the Japanese yen to go up higher. With that, Japanese yen going higher and also the interest rate going higher, that's going to destroy a lot of people's carry trade. So when these people are losing money on the yen carry trade, they will force to sell your yen, and you would just create a uncontrollable monetary volatility on yen. So people are gonna see more. The yen is going to trade more volatile, but right now we're still not seeing the central banks are going to have a very quick raise of interest rate, which I think is highly unlikely to happen. So, from all the reasons above, that's the reason why I believe right now the central banks have done something that's very brave, and I believe that they are making the right decision. They are making the right call because right now the Japanese central bank saw the wage growth as long as inflationary scenario. So the Japanese bank is not going to do it very quickly. They're going to take time. They're going to maintain easing and until the right time to actually raise the interest rate further. And that will be a very long procedure of normalization. So I think it is not easy to step out of negative interest rate environment. So what the Japanese central bank have been doing is actually remarkable. So it actually brings me a little more faith, even more faith on Japanese economy. So I am very bullish on Nikkei index, and also I'm quite bullish on Japanese related assets, real estate, you name it. And because the central bank is doing the right thing, and the government is working closely with the central banks, and also you have many kaishatsu, many big companies, corporations are working together to have a proper wage growth. So speaking of wage growth and Japanese kind of culture career, that would be another topic. So I thank you for watching this video. There may be a lot of difficult concepts that you may need to go back to my previous video about yield curve control, and you have more idea of what yield curve control really is, and you can search yen carry trade online and to actually understand what that actually means. So thank you for watching. If you like the content I'm sharing, please subscribe, click that like button for me, and also you can see join our global investor community. So I will see you in the next video. Goodbye.